I'm back, sorry. Grab some food too.
So the first bar, strong bear bar, 10 points. So the target, it only closed 9 points. So to go lower, it to close lower. It's a gap down. So for now, it's possible to transform the open. Strong bar, no tail. Testing that regression channel. Also, I think can be relevant that 50% of that previous day. So it's 50%.
Yes.
So bar 2, inside bar. So for now, it's big down, big up, which is confusion and rending range. Inside bar, so at the same time that is breakout mode, it's reasonable buy, and some could reverse. So if it go and trigger the buyers and reverse, they stop here and they can try to reverse from here. The bulls did 8 points. So same as for bears. Bears did 10 points, bulls did 10 points. This gap down into the 50% of the previous day. Okay, so now bulls are making money. Those who both the bull inside bar, that was breakout mode. Those who bought the bull inside bar, they are making money. They made 1-to-1. So if there's now pullback, they're gonna be the ones who will, those who took profit, they will add more. Strong leg up, so bulls can expect one leg more, 26 points, so they can go for 30. This is strong bull leg of the 50%, so there's a lot of buying pressure. For now, it's dominant feature of the day. Very close to EMA. Yeah, for now it's a bit still too early for considering any trade. The bulls can try to go for I should move. So on a pullback, they can try to enter for 2-to-1. Around here. For now, this is the opening that was the trending range. This is breakout. Now they need second bull bar for good follow through.
This will be Roma strategy, right?
Mm-hmm. Yeah. Yeah, but for that strategy, you need the strong second leg and you basically betting that you will get the second leg up. For now, this is opening of the day, so it's too early for that kind of trade. And basically, for now, bull have only one bull leg and now weak follow through, but bears got weak body as well. So for now it's neutral. They reached 30 points. Test the EMA. They're very close to previous day close, which is acting as the magnet. So those bulls, they can, for now, there's a probability that those bulls will get the second leg up to test the previous day close. So it's dodgy, it goes inside previous bar, big tails. There's still some traders who will try to enter with 2-1 of that leg. The type of the day, I'm not sure. I think for now it's a trend from the open, so it has the strong. For now, it's always in long. It have a strong spike, can be channeled now, and until it managed to turn into always in short.
Yeah, sorry, we didn't close the gap yet.
Yeah, so until bears manage to create here always in short, then it will then it could be potential reversal from open or breakout mode. But there's big buyers from the 50% pullback after the previous day. So for now, 60% probability for bulls and 40 for bears. This is good follow through for bulls, but they did not manage to close above the bear doji. They did 29 points. It's possible second leg for bulls now. So the leg 1, pause, and leg 2. But now it's on micro channel, making higher lows. Possible spike in channel. So this spike pause now can be channeled. There is open gap for bulls. Now if bulls will make another strong trend bar and make the second gap, then this is the trend from the open, and with two gaps it can go higher significantly. The measured move of that leg is at the previous day high, and now they reached the 1-1 of that bull inside bar. So because of that, there can be a profit taking from 30 points, 2-1, and EMA. So it's spike in channel. They closed above the previous bar, so there is no profit taking, and they closed 32 points. They already reached 35, and 40 points is here. So at this point, there will be profit taking. They closed above the previous bar high. This is bar 6, which is first 30 minutes. To consider a trade,
To consider what? Sorry.
a trade. It's for now. It's always in long. Basically, could buy for any reason, but there is overlapping bars. The bar 6 have a small body and big fails, but managed to close above the previous bars, and third close above the EMA, so the second bar that managed to close above there, it will be another sign of strength. Probably better to wait for now. Okay, big bear bar testing the beginning of the channel, or the spiking channel. Now it's possible double bottom with that channel. The gap still open, but bear bar is strong. Now those bears can expect a second leg down. Bulls managed to get 2 legs with that doji pause, and they reached the target previous they close. They failed to close the second bar above EMA, and now it reversed. With the first bear bar, I think it's reasonable to try maybe to short on a pullback or second leg with that with the Romine setup. And now there is some dropped bulls at the top here, and their break-even will be here. If the market will not let them to break even and continue to go lower, it increases the chance for bears. But if it managed to close above the break-even level, then it will be a sign of weakness for the bears. But I think the bar 7 is strong enough for bears to expect second leg down, or at least to test the low. So this is also 50% test of the first 30-minute bar, which closed at bar 6. There was strong buying at the 50% of the previous day. So if bulls want to continue, they will start buying here. I think it's still always in long, so it's not always in short. And the bears managed to close 16 points, but they already reached 20 points. So there's big volatility for now. With the one candle market make 20 points. Because they already make 20 points, and at 50% plus the bottom of the channel, I'm not sure if it's a good short. The gap is still open. Yeah, probably the better get some follow through and then try to enter.
Yes.
Still not enough. Okay, next bar. Strong bull bar. Managed to close higher than the break even. This is inside bar, so the same as here. I enter above and stop below. They did 10 points and 2 ticks, so it's not enough for continuation. Already reached 14 points, and 20 will be exactly the high. So bears got weak follow through with that strong pull bar. At this moment, they are overlapping each other. That was the spiking channel. And now it tests the bottom of the channel, and it's possible double bottom with bar 4 and 7. Bears still not making money because there's only 3 bear guard. So now if bulls will manage to make the higher high, then they will go for 40 points here, 1-1. This is inside bar, so it can be the mother bar. Possible trap zone for bears below, for bulls above. For entry, better to wait because it's reasonable entry, but too big of the risk, and basically entering at the top of the trending range for now. Bulls still have an open gap. Continue to trending range. So bear bar holding below EMA. It did triggered the entry for bull inside bar. So those who entered there, they will try to exit here and reverse. Close dodge, so not good for bulls or for bears. Bears still possible get the second leg down after one strong bear bar. Still always in long. Okay, so the bulls reached the 40 points. Those who entered above the inside bar, they still did not make 1-1, but they managed to close outside the trap zone. So most likely they will reach the 1-1, and it will reach the next target for the mother bar. This is another breakout of the previous high, so now they need to get a follow through for successful breakout, because now it's trending range here. The measured move, with the way they missed by 1 tick for that entry. Yeah.
Sorry, which measure move?
That one.
Okay, okay.
Yeah, so 2-1 is here at 2.02, and they entered one tick higher of that.
But it wasn't. They didn't feel it, right?
Yeah, they missed it by one tick. Those who
Okay.
enter exactly at 2-1, but those who overrun them by tick, they managed to enter. So that was the pullback into the 50% and the double bottom with the channel, spiking channel. So now this is strong bull bar. Always in long, and bears never manage to make money. It's now it's in a micro channel for the last 4 bars. It reached the 40 points. So it will be important how if they manage to close higher or there will be strong profit taking. The previous bear bar probably was big because of the previous day close. But now it closed above it, so they continue to hold it.
We are also close to the high of yesterday, where some guys closed their positions, and if they were long when they close the positions, maybe their intention is to continue going long. So we are in a zone where the guys that get out yesterday at the end of the day maybe start participating again.
Like entering back on a breakout.
Exactly. Yes.
Yeah, that will be the sign how the bar is breaking it. If it managed to break the gap and then retest it, yeah, then those are entering and maybe adding or entering after the breakout at the breakout point.
Yeah, that is what I meant.
For now, I'm thinking if it's reasonable to try to enter on that pullback, given how the volatile it is. It's likely that there going to be some pullback to get filled and to continue, but it's breakout with one bar. There's for now at every strong bar there were opposite of that. So there was strong bull bar and then bear bar, and strong bear bar, strong bull bar. Possible to get another strong bear bar, but for now always in long, and looks like it will at least reach the 61.8 from the mother bar. This is bar 10, so almost 1 hour after the open. Next bar. So again, yeah, every time there is strong pull bar, there is positive that. Now they reached 40 points and there is strong profit taking. So this is sign of weakness for bulls. It's still pike and channel. They managed to reach the target, the 61.8, and those who took that bull inside bar, they again managed to make 1-1. For now, bulls from the open making money and bears not. So for now, it's reasonable to assume that this strong bear reversal bar will not reach 1-1, and for now there is high probability to trade it and make money at its high rather than take a loss at 1-1. That is the same risk window. but the bar is strong reversal. This is another failed breakout. The first breakout was that bull bar after that trending range, and it failed. Then that was probably the second failed, and now third failed. There's still open gap between here and here. Now it's holding above EMA, but only one bar closed bull with bull body above the EMA. So it's possible wedge maybe on lower time frame with that. Uh, 50% of that second leg up is here. Bull finished 2 legs now with that leg. For bears, probably one bar is still not enough to expect the second leg down. However, if they manage to get continuation, then they can get the 2 legs. Here there will be bulls who will buying back their long, which they took at 1-to-1, and there is trapped buyers who will try to enter at break even. I'm thinking, not sure if it's reasonable to buy or better to wait, because it's now overlapping probably better to wait and see the follow through after that. Bear bar. It also make 11 points, so they can go for 15 at least.
We didn't complete 1 hour yet, right? No.
Yeah, it's bar 11. Yeah, at the close of 1 hour, it can start to change the how's it called market state, market phase. So the next bar 12. It's strong bull bar, strong reversal. It's high one entry, but bars are overlapping. It reached the 50%. It closed above the break-even point for bulls. There's still trap bulls here, but overall it's strong bull bar for continuation. Bears are filling again, so those who fade this bear bar, they will take profits above. And for those who are buying, their target as well above that bar. They closed 6 points, so it cancel out the this profit taking for that bear bar. So it was probably reasonable attempt with the Romain setup. It reached 2-to-1, which is here. But if risking the last blow, it did not reach then. So risking only the last bull leg, only then was possible to enter. still in tight channel. All bars are overlapping. Bears closed that gap exactly by the tick. Yeah, because if they would manage to hold it, then there will be two open gaps and it will be very bullish. It's still always in long and bulls are still strong. It's almost 2-bar reversal.
Where do you see the second gap open?
Yeah, it's not open, it's closed.
Ah, okay.
Yeah, I was saying if they would manage to hold it and to hold it open, then it will significantly increase the probability for higher prices.
Perfect.
Yeah, but for now they failed to hold the open gap. It's reasonable entry about that bar, but my concern is that the bars are overlapping. Also, those buyers failed to enter by tick because if they last time they entered one tick above, this time pullback was again one tick higher than their previous entry. I think it's reasonable entry above that bar 12, but I don't like to place my stop below bar 12, so the stop then has to go below bar 7.
I agree.
Now this is spiking channel, and there is high probability for at some point market to test the beginning of the channel. For now, I will remove the mother bar so a little bit clearer, and those old levels.
And we have so far we have the two tops for the wedge, the two highs, bar 6 and bar 11 for a wedge.
Yeah, I would say that there is already a wedge with that pause, so the first pause, second pause, and the third pause. So it's definitely some type of wedge or on a lower time frame. So if they're gonna be low 2, then it's wedge plus double top, which is high probability.
It's true that number 4 is a bear bar, but maybe 1 is high of 6, 2 is high of 11. But it's true that number 4 is a bear bar. Yeah.
Yeah, could be. For now, bears never managed to make money, and bulls making 1-to-1, and probably here they make 2-to-1. Yeah. Still high probability for buyers and low for sellers. Still prefer to wait because bulls never manage to get consecutive bars. They get 2 bars, basically trending range 1 bar, and big follow through again. Weak bars, then strong bar, again big follow through. So it's not that clear. So those who faded the strong pair bar, they make money. That was higher probability for them. They took profit. The high, those who entered above the bar, they still did not reach the target. Bar closed, didn't manage to close above the high, but overall strong bar. Now they closed 12 points, so they will go for 20. And 40. No, they already reached the 15 points. There was pullback where trap sellers exited at break even. So those who
Did
were
we
trapped, they added an exit here.
did we reach the high, the yesterday's high?
No,
Okay.
still 2 ticks. So there's gap closed. Now this is possible, another gap that can form. Probably since bulls managed to close 6 points with that bar 12, it was a good high one entry because bears managed to get 11 points and bears reversed it with 6 points. So now another new high. So it's the merged move target of that first leg is still not reached. 1-to-1 of that big bull bar with that high, and 2-to-1 and 1-to-1 of that high 1 and 3.
It seems to be an interesting cluster above. We have the 200 from the first, the 200 for the 11, and yeah.
Yeah, overall the price is very overlapping, so it's not that strong for bulls. Now with new high, it's possible another failed breakout. There's gap open, so those who were selling the high, they were trapped. But those who were selling that trap, they make money, and so probably those who sell there, they will again try to make money here, selling, adding, and then take profit on the breakout test. Strong pull bar 12 points, but did not manage to close above the bar 11 high. So now bulls got 3 consecutive bull bars. This is basically, it's changing its state of the 1 hour. So now it possibly leaving the tight trading range to trend. It reached 1-to-1, that high 1 entry, reached the measured move of the first leg, reached 20 points, so from that low, or from that, yeah, from here. Now it's that was breakout of previous high, and this is breakout of previous day high. $20 points below. So now 50 points from the opening and 20 points from the last low that reversed previous day high. A lot of overlapping bars, so can be profit taking, but now 3 consecutive bull bars, they are not very strong because all of them are overlapping as well. They have tails above and below. Still always in long. To enter, it's too late to enter with like a Romain setup because it's basically third leg up, and it already played out from that high one. So now just wait. It broke that regression channel and closed above it. Now 4 consecutive bars. Now it's reached all those targets. Close 22 points. 30. All of that bars, they are in tight channel for the last 4 bars, and so this is something that I think those algos are doing. So they are entering of each candle with the one, so that the first target take 2 to 1, then from that second bar, so the target is here. Oh, okay, it's so that target did not reach. Yeah, so they managed to enter from that bar where there was break-even bears, but did not manage to enter from the next bar on that pullback.
She never used the point counter from the opening of the candle instead of the low.
Yeah, she would use from bar 12 because bears did more than 10 points, so that like resetting that. Yeah, so here they did 11 points. So now take measure of that low, because bears did 10 points, same as here. They did 19 points. So now we're measuring from here until that high. Then they again make 10 points. Now it's resetting from here. But I also do measure from the beginning of the session, because they will take profits at not in this example because it's very volatile. It's in first hour it already 50 points, but overall at the normal day 20 points from the open will be very important, and then 40 points from the open, another important.
From the open or from the low of the first candle?
It's important from both, but because it's important from the open as well, I will track it as well, because
because you are measuring from the low of the candle one, not from the open.
Yeah, because that was the lowest point.
Okay.
In normal day, the average range is around 40 points, I think, on ES, or 20 points. So the 20 mark are very important. I think if take that previous day, so that was the lowest point, and while market grinding, so the first stop at 20, yeah, but it managed to close higher. 40, yeah, so you see there at 40 points there was some profit taking which stopped the bull trend. Previous day here, yeah, but it's volatile again. It did more. But if the day is trending range day, usually it will consider those 10 points, 20 points, and either stop there or reverse to the opposite side. Now they reached 50 from the open, and now 4 consecutive bull bars. So now it's very strong. This is something that they did not have at the open. They was constantly reversing. The bars are overlapping.
Yeah, and decreasing the body size.
Yeah, they have now 2 bull bars above the breakout of the previous day. Now there is open micro gaps in those. So in some way, this is like buy for any reason, breakout mode. Yeah, I'm not sure. I don't have a strategy for that type of trading. The next bar for now, just wait. They closed 20 points. Yeah, so now they are going for minimum 25 here.
I think that I asked you last time, but I don't remember the answer. Have you seen Albrook's adding this kind of tools? Because in the videos, this is something coming from Rose. You told me, but have you seen Albrook's adding this kind of things to his daily analysis or something like that, or he uses 100% what he show in the videos?
I think, yeah, I think everything that is in the course he using during the live streams.
Yeah, during the live streams, I mean.
Yeah, like you asking if he if the course are outdated and he have something new.
Exactly that.
Yeah, I think he started to. There is some things that changed in a course. He is saying that the minimum scalp for or the minimum scalp on ES is 1 point, but now it's probably 2 points instead of 1. That probably is something that he now changed, and now he paying more attention to 10 points rather than 5 points. So it's like he take it from processing. Yeah, but I personally I just saw several live streams from him because I only had 2 months of the subscription.
But you have access to the. I thought that you are paying now because you have access to the library, or once you have access to library to the encyclopedia. Sorry, once you have access, then you have access forever.
Yeah, it's one-time payment to get the access. You need the access to the course, and then you can buy the encyclopedia.
Yeah, but what I mean is, if you stop paying now, do you still have access to encyclopedia?
Yeah, I paid 400 for the video course and then 200 for encyclopedia. And
So
that's
you are
it.
not at this moment. You are not subscribed to the live videos.
No,
Okay,
yeah,
perfect.
at the beginning, 3 months ago, I took
Okay.
the Librem subscription.
Okay. And you still, besides that, you are not subscribed now. You still have access to the updated encyclopedia.
Yeah,
Perfect.
yeah. They are separate. I even have a different website.
Yes.
Yeah. For Librem, it's BPA something, and for encyclopedia and video courses, BTC something.
Perfect. Thank you.
Yeah, no. I think given it has 2 consecutive pull bars above the breakout point, it's reasonable to enter on stop, but where's my stop? I'm not sure. At the last major low, which is probably R7, or from the video of I have it here. So he had a video this breakout
Yes.
trading system, and this guy, he trading the breakouts, and basically he used, as far as I understand, he have a methodology to identify the breakout and then enter at top or at market at bar close, and risking 1-to-1 where your for example his short was so that was trending range, this bar was breakout of the trending range, and next bar was the follow through, so that enough for him to confirm a breakout. He entering a short and close of that bar. His profit is 1-to-1 of the strongest bar, which was here, so that his profit taking and risk is exactly the same, stop above. So basically can try to do the similar thing here. Same rule, there's breakout first, then follow through, and now if entering at the close of that bar, and on that move the strongest bar, yeah, they're not that strong, but the biggest bar is that one, which is 11.5. Basically that's the target. And there's the stop. Yeah, and if it done the right way, this is profitable strategy for him. Now Doji inside the previous bar, associated decreasing in momentum, 625. Yeah, that's smaller than that. Possible wedge, but that was the bar 12, the first tower. They probably could get a second leg up. The pairs never managed to make money from the opening. So for now, there is still high probability for buyers to buy below and take profit here rather than sell below. and expect 1-to-1, so 40 for sellers and 60 for buyers. Now this is dropped buyers, weak bull bar, but they likely to get a profit. Those who faded the bear bar below. Now
it entered the inside yesterday's channel.
Yeah, I did remove the sum up to. Yeah, and for now holding above the channel, so there probably could be some disqualifier if it managed to close below. With now it broke the micro channel because it make lower low, so this is high one. High one from weak bull bar, but overall still high probability. Their 1-to-1 is they 21 points, but they go for 25, and their 1-to-1 is 30 points versus we enter here. I will skip it because already long with that. The pi entry should be here because it again overrun 3 seconds. Well, now there is 30-minute bull candle, then 30-minute bull candle continuation, and now another 30-minute candle with bull body. At that candle, there was pullback to 50%, then continue.
Have you seen Ali talking about having a super good understanding of one time frame, higher time frame, and one lower time frame?
Is it from recent videos or from all?
Yeah, the last two posted yesterday. He said that having a good understanding of one time frame above the one you are working and one time frame below, or a higher time frame from the one that you are working and a lower time frame, it's crucial.
Yeah, for some reason I cannot. Did he has the example of some chart while he explaining that?
No, he just mentioned
that was the slide.
In the step by step, yes, of the when he described the methodology he uses.
Yeah, I just can remember because I was reading the book today, and there were as well some examples on a 5-minute chart, and Holbrooks was talking about the importance of the same thing, about the importance of identifying the higher time frame structures on the lower time frame charts and only using the one.
Whoa, nice.
From weak bull bar, but very strong bull trend. Now it has the So it has gap, open gap here, open gaps with that 4 consecutive pull bars, and now strong continuation.
Sorry, another thing, when you trade live, do you use the DOM, or do you do it like you are doing now, like right click and put in the...
Yeah, the same. Usually for example, I don't watch the chart, then the 20 seconds left, I see the candle, and if I want to take here, if I want to maybe enter one tick above that bar, I prepare my buy stop order, and I'm waiting until it closed, and then put my stop order once the bar closes.
You drag it and release it there.
Yeah. So yeah.
Cool. That is
Yeah.
nice.
So before I enter, I prepare it here, and then I move to get ready. Yeah, just release the button and basically get the trade. Yeah, because
Cool.
sometimes if you want to, if this bar almost closed, maybe a few seconds, and you want to enter one tick above, you're getting ready, and then bar closing one tick higher, and then it will not let you enter and stop. It will give you error because price already here, and then you miss the entry, and you have to do.
That is why you move the
Yeah.
the line you have above.
Yeah.
Perfect. And that is a market order because it's a take profit one, right?
With this, yeah, with the stop order, yeah. So strong pull bar closed above the previous high. Now it's it did 27 points, so it reached 25 points. Now it go for 30 here. Those high one entry bulls did not reach target yet. Those who faded the bear candle, they make money. So from the open, oh, I pressed something. I pressed stop.
Play again.
I want to show that from the open, bears never manage to make money. Yes. Yeah, they even never managed to get a scalp.
Never, eh? Right.
Yeah, so the one entry they had here, they only got 1 point, but if you enter one tick below the bar, you need 125. So they can't even make 1 point scalp. And here they managed to do 125. So only here minimum scalp.
So remember, I said that we had a cluster of levels there, the 200, and from the beginning, it seems that they reach all of them.
Mm-hmm. Yeah, and it break out the
Yes,
previous high
yesterday high.
and
Yes,
and left the gap. And so basically those who were selling the last highs, they are trapped now because the gap is open. So they were selling, adding, and they cannot exit at the breakout test. So now they are forced to exiting they're scaled in short positions.
Do you hear any noise like a hair dryer?
No,
Okay, perfect.
uh, the so the entry was at that bar, and the target is here, but it will not show now.
Where the entry? Sorry, the close of.
Yeah, the entry about that bar, the bar is
Okay.
15 because it was second. Yeah, it was the second bar breakout
Yes.
of the high, so it was confirmation of the breakout and entering with that strategy. That was high one entry, which was good, but weak bull bar. Uh, those who played it bear bar make money. Now they go in for 30 points because they closed 27 points. They closed 31 points, so no profit taking at 30. Already almost reached 35. Forty. Uh, from that entry, the target reached. So with that strategy, and there's some profit taking. It reached those who entered high one make money. Gaps are opened. It closed 31 points, so it can go continue. Uh, for now, I'm not sure if it's reasonable to enter with Romine setup uh, because it's in a parabolic move, and that was the last major low. Reasonable. So it did 60 points from the low.
Yes, but what I see too is that making the force number four top of the wedge and is making a triangle too.
Like that.
Exactly. It is true that yeah, something like that. I'm from 12, from the low of the 12 and the 17. No, low of 12. Yeah, something like that. One, two, three. But it's true that it's always in long still.
Yeah, definitely.
A gap's open.
That
Another gap there.
that last low, that last major low.
Mm-hmm. And still the last gap is open, and it's bigger than the previous one.
Uh, Probably need to consider some more aggressive entries. Yeah, at this point, not sure how to enter. So for now, just trail the Romain setup. It closed. For now, it reached the top of the progression channel and cannot close above it. It reached the 2 to 1 of that high 1 bar. It already so did 35 points. If they manage to close higher than 40 is here, they're going now for 70 points from the low. Yeah, I'm not sure about this long because if they're going to be pullback, they can test the breakout of the high where the stop is.
uh,
This is uh, low 1, and now so it broke the micro channel, and this will be high 2. No, high 1 entry, the same as it was here. It still cannot close above that regression channel.
zoom out a little bit, please.
More?
Yeah, to see the big picture. I don't know where we are. Okay, what do we have on left? Right, we reach a level from. I think that is Monday, right? Uh, you have a lot of volume there.
No, I think it's probably Monday was that.
Okay,
The holiday this Tuesday, I think. Wednesday,
okay.
this Thursday,
If
probably.
you click there, if you click, it's going to say the day below.
Thursday,
Uh,
yeah.
so go to left again, please. So that day with the there which day it is in the middle of the screen. Yeah, that one.
Friday.
Friday. Okay. So we are reaching that. We are in a higher time frame. We're in a big channel, right? So and we have two highs there marking the top of the channel if you want, and a lot of activity there. It is true that it's Friday, so you have a lot of uh, options expiry and all that kind of stuff. And I know end of the month or beginning. I don't see the beginning of the month. Yes. So people taking positions at the beginning of the month there too. I know that we are trading in 5 minutes, but I think that we have to take that into consideration.
Yeah. So for now, it's 20 bars, and bears never managed to make money, even scalp. Uh, it is risky, but still reasonable and high probability. I won, even though it's losing its momentum. The bar 20 closed inside the previous bar, and now bar 21 is dodgy and again closed inside the previous. I will try to anchor hold the high one because it's still holding that micro channel. Basically risking the low of that bar, because if it fail, then it will do a double top because it's low one, and now if it trigger higher high and go lower, it will be low two. The target is 2 to 1, which is the highs of that Friday, and the measured move of
Yeah, you have a cluster there too. Yeah.
measured move of of those bodies.
We agree that it's a risky trade, right?
Yeah,
Okay, perfect.
risky but reasonable. It's always in long and buy for any reason still.
Mm-hmm. That is true.
They reached at 35 points. Probably can try to do that 40 points. So 22 closed inside the previous bar, still struggling to close the regression channel above. So probably it will slowly grind higher. Now it make higher high. So now if it break the below, it will be low one. Bulls did minimum scalp. Now two dodges in a row. Now with week far 22, I'm not sure where to have my stop, because my stop was basically my bet was that they will not manage to make the low two, but now with new high, it became another low one.
I prefer to keep it. Maybe because you have a spike and channel and you have one move before that. I wouldn't move it to below the 22. I know what you say, but I still I will still use it as protection, the 21.
Yeah, definitely not a good idea to move to 22, but
Mm-hmm.
to last major low.
Ah,
That
okay. Okay. I agree. Yeah, to let's say to transform it in a higher probability trade.
yeah, because for now it's still always in long, and there is no reason to exit or to short.
Okay.
So next bar, another doji.
Hmm.
Keep making higher highs, uh, higher lows. Now 3 bars in a micro channel. It now exiting that very steep channel, red line. Still holding the regression channel line.
I am afraid of a 50% pullback from the last leg or something like that, or 30% pullback, and that would top you out.
Yeah, but for now it's very low probability. 50% from here.
Yeah, exactly. Or 30%, just a pullback of some guys of the second from that candle taking profit, maybe a little pullback.
Yeah.
Guys that enter at bar 18 maybe are now with at 1 to 1.
Yeah, they make 1-to-1.
Yeah, so maybe some profit
Yep.
taking that makes a pullback, but
For now, buyers below the last low, but yeah, it's now in a tight channel or tight trending range. So breakout mode, you can break out
but
either direction from left.
it's true that moving to the low of candle 17, it would be like 90 to, where's your entry to, it's almost 20 points of risk. It's a lot.
It's a lot, yeah, but on a day like this, this is what you have to expect. Probably reduce your risk then, because in the first, it's not even 2 hour, but market already make 70 points.
Yes, it's true. That is true. I was thinking about money.
So yeah, I don't like my stop, but now risking that bar because it's high one, so it's still reason.
Okay.
Because if it make the lower low, then it can be higher low, lower high, no, yeah, higher high double top with those bars. Bar 24. So this is 2 hour, 2 hour bar.
Yeah, but
That
still
that means
close
one
bullish.
hour we call bullish.
Super bullish.
Some cool at that 1 hour so they could try to exit at break even at the 50% pullback of that part. Bears can get minimum scalp, which is one tick lower of the stop. So those make 275. Keep holding that regression channel.
And it can go to test the bottom of the channel, and you are close to your 50%.
It's entering now.
Maybe a Wyckoff check there.
Yeah. Still buyers below the bar 24 because bears never manage to make money. So there is low probability that they will manage to get 1-to-1 before price make one tick higher. There's gap open, so that gap can be closed. It might stop. Yeah, I'm not sure if I should move it because if protecting with 1-to-1 of that bear bar, it's in the middle of the gap, and the major low is too low. And they did 575, so 5 plus 30, so they can try to get 10 points.
And that would be 50% of the, close to the 50% there. Yeah. Mm-hmm. Tanan, tanan.
It's worth to go against that bar, so I don't like the stop here. Also, their break even will be here. Okay, anyway. They didn't even get minimum scalp, so basically stop was exactly at the tick. Since the bulls did not, the bears did not get the minimum scalp, this is a sign of strength for bulls, because now there is trapped scalpers, but also it reached the break-even point and did not manage to close above, and bears did 575, so they can still get here. But now this is high one. So
I like that.
yeah, but I can just stop. I don't like that bears managed to close 575. They still can go lower, but again, I don't want to risk here, so I can risk the small bar. And, 2 to 1.
No, I don't like that.
Yeah, me too. It's double bottom with that low, which was triggered
Mm-hmm.
one tick lower. So that was high one, which failed. And now this is another high one. That low. Yeah, probably I will not enter because the bull bar is weaker compared to bear bar. If it would be same size, then could enter. So they triggered I1 again and got second leg down. Now those sellers here, they make money. It led the trapped buyers to exit. Yeah.
Did we check the high of the bar 16? 16, yes. Bar 16. Not yet.
The breakout point.
Mm-hmm. There.
So the bears did 11.5 and they closed below that regression channel which was holding here. So they can go for next target. A strong bear bar compared to those bull bars. But now this is second leg for bears. This is 50% of that last leg.
Mm-hmm.
This is second hour bar, and they are going 3% at that point. Close to EMA, and at EMA there will be buyers. They make 1-to-1, so on a pullback they enter back, and 2-1 still not reached. The gap still open. Strong bear bar closed in slow, but it's still second leg down. So I'm thinking
Yes.
if it's a good idea to fade it. But
The gap and the bottom of
I
it.
don't like they closed 11 points, so they can continue. But if the next bar is bull bar, then it will be a good I2 entry on a pullback. So they finished 15 points. Almost get 2-to-1 for that. It's weak. Bear bar closed inside the previous bar. EMA test closed that gap. Breakout test. So now those who are selling and scaling in make money.
EMA test.
Now at that high, I think there's more buyers than sellers because it's still leg 1, leg 2. Bears still don't have a consecutive bear bars, but this bar is strong. If that will be bull bar, then it will be a reasonable high to entry. For now, I think it's better to wait. They reached 15 points and 20 points here. The entry for shorts, there is no short entry because only several bear bars, and this is potential second leg in a strong bull trend, so better to wait for long. Now they triggered high 2, closed inside the previous bar, holding the EMA. Now if it make lower low, it will be possible wedge. Uh, 2-to-1 still not reached from here. Also so there were more sellers than buyers at the high of bar 27. Now 3 consecutive bull bars. If next bar will be bear bar, then it will be 4 consecutive bars. So it will probably even switching to always in short at this point. So they holding EMA and now strong 2-bar reversal, bull bar. They reached 2-to-1 of that bear bar, so they are taking profits. But the fact that they reached target is the sign of weakness for bulls.
Yes,
That
well, it didn't close above, but it's stronger than has a bigger body than the last one.
it overwhelmed the previous two, but not that strong bar.
Yes.
But it's strong enough. Bears finished 15 points, cannot close lower, but Bulls only close 5 points plus 1 tick. So it will be better if they manage to do 70 plus 3 tick, not 1 tick.
And still that gap is open.
Yeah,
No, I mean one above.
Here.
The bull one. No, the bear one. Yes,
that
one.
one. Yeah. So now it's reasonable buy because it's strong pull bar that is 2-bar reversal holding above EMA. Bears finished its target, and there is also a wedge. Make higher high here, and then if the high one will triggered, then there will be another higher high. So the buy with the stop on that bar, and if it fails, then wait for double bottom to enter long again. The target, there is not enough bars, but if that would be more than 20 bars, then after the EMA test, we expect that at least test of the high.
One thing that I don't like is that still from yesterday high, the gap is still open for a kind of. I always say Wyckoff check. I know you understand. I don't know what's the. It's a gap open for a higher time frame, right?
I mean, yeah, the test of the breakout. Yeah,
yes.
right now, there is gap. There is gap here, so you could say that there is gap between that high and that low, because it basically makes high, then lower low, then high, lower low, and continue. So there is the gap here, that one, and there is also micro gaps that I marked. Those. So yeah, and that gap basically the middle of that, the middle of that high. That high is the middle of the gap.
Yeah, I believe that it's a high probability zone to be tested.
Yeah, at some point, if Paris managed to get enough selling pressure. For now, they failed. They needed another bear bar to switch to always in short, but they failed, and now there is wedge, so it's reasonable entry. It's high probability for buyers and low for sellers for now. But bulls also failed to close by 2 ticks higher and close inside the previous bar. For now, 2 bars reversal, entering on a strong high 1 bar.
Oh.
Yeah, it triggered 1 tick. It closed 2 tick below break even. Possible draft sellers will try to exit here. So not inside bar because
yeah, 1 tick higher.
Yeah. But now it's wedge. So now this is basically low 4 with low 1, pullback low 2, low 3, and that will be low 4. And if next bar is bull, then this is double bottom wedge. It will be high probability for buyers. Now it's 2-bar reversal for sellers. Trapped buyers above the bar. Buyers did not manage to close 5 points plus free tick. Sellers did 14 points. So they closed below the break even, which is not good. Another EMA test. Closed inside the previous bar. Yeah, this is main. This will be the main feature of the day. Now they did 35 points, and this failed wedge. Yeah, that failed wedge was the measured move. So it was the wedge that has to reverse the pullback. I'm surprised they did trigger it, because usually when they want the wedge to fail, they just do this thing before it triggered. But instead they make it trigger and then make that.
Another thing, Ilga, that we don't know here is that if that day at that time there were some news or something like that.
Yeah, but it still should be maybe, yeah, something to consider.
Went to the close
But
yesterday close.
usually they happen, I think, in the first 2 hour. Yeah, I'm not sure. And so now they had the wedge which failed, and it was measured move. So this is one of the main reasons why it stopped there. Also, it 2-1 of that strong bear bar, which was the second leg at this point. That bear bar was stronger than any other bull bar from here.
I'm still thinking that on that wedge from the beginning, the 1, 2, 3. Now we have 4, or yeah, 1, 2, 3, 4. I was expecting a down move from the wedge at the beginning of the day. It's that triangle, super sharp triangle.
Yeah. Yeah, it's overall confusing because they had the overlapping bars. The beginning was bullish, but very weak for bulls because every bull bar were reversing here. Then after 1 hour, they got those 4 consecutive bull bars, which led to continuation, the second leg up. And it was parabolic, so not sustainable for healthy, moving it small pullback bull trend. Then there was 2-legged move for bears, and again they got strong bear bar. They make a wedge, so it was high probability buy, but they completely reverse it. It's now reached 50%. So they reached the profit target at 35 points. This climactic bar there can be profit taking below the 50%. Now need to wait
Yes,
for
now it's just wait and see.
yeah, for second bar. So they continue now 40 points to 4, so they did 50. So they now ignoring the 50% pullback of the entire leg up. Now all the old stuff can be removed.
The block of the gap.
Yeah, now so they reached 50 points, closed 44. The measured move with a strong leg as the target. Almost reached 2 to 1 of that failed wedge. With a little bit smaller.
This is September.
September
Oh,
8.
22.
Yeah, 8th of September, Thursday. The day open was here. So it's not big up, big down. It's a possible trending range. That will be bottom of trending range. If that was spike in channel, then this is the test of the channel again. Yeah, better still wait.
Yes, that day. I'm checking the calendar. Fed Chair Powell speaks, but it was 9. Let me check the New York time. It's -4, right?
This New York time.
Yes, it is UTC -4. Yes.
Yeah, can check.
So that day, we are at. What time is it? No, it's midday already. So at midday, there were nothing. Okay. But at 9:10, almost at the beginning of the session, Fed Chair Powell speaks. So spoke.
Yeah, he's saying it's -4. Now it's reached the measured move of the body, the target. It goes below the previous bar, big tails, but so there is some profit taking, but still strong pressure down.
There were a beautiful reverse to the medium yesterday's medium.
To what?
There was a reversal to yesterday's medium, and then it was rejected from there, because the blue line is like the median from yesterday's price action.
Mhm.
So test it and bounce from there. Yeah.
Yeah, yeah. It broke that middle of that progression channel, closed above it, and then tried to close above. Uh,
That it was what I was showing about bonds, that they expect a reversal to the medium.
mhm. For now, it's tight channel for last 4 bars. Now inside bar.
Rose, in this case, is that's he is the volume profile for this
Yes,
kind of environment. I mean, to see if they have a poke there or something like that.
she used a volume profile on 15-minute chart or 1 hour. Uh, like yes, she's is like the volume pool to see.
Just I know that is off topic, but just to know, have you seen that tool from for volume that you can choose directly the stretch a little bit from price? Uh, no, on price, yeah, a little bit more to see the high of the day. Yeah, there. So if you go to tools and go to more tools, and there and no, sorry, above more tools is draw volume profile there. So click from the first candle and drag to the last one there. This it does this only once, then because it's taking the data from volume there. So with that tool, you can trace from any candle to any candle, and you see the volume action uh, super fast. You don't have to configure any study, and you don't have a from wherever to wherever, and you don't have to go to the yeah. It's like that.
How to remove it? Uh, just
Just
delete.
click it and delete it. Yes,
Yeah, or can I adjust it?
yes, yes. You can, and it's super cool because you see the evolution. What I usually do is to go from there. Yes.
No, it's not moving.
No. Yes, you can. Okay. From the low to the high, from that leg, there is a strategy to see how the volume was distributed in that leg from the beginning, from a low to a high. So with this tool, you can do it super fast, because if you have a shortcut in your keyboard, you go from any high or any low to any high, from a high to a low, to a low to a high, and you can analyze the evolution of the profile, volume profile. Is interesting
Mm-hmm.
because you can see which was the candle where you have the most volume, that produced the most volume.
Yeah.
But nothing, just in just a comment.
Yeah. For now, yeah, it's
Yeah, we
in
are
this
using another
case,
technique. It's just wanted to show you.
it's very close to bottom, the session open, and it's taking the bar one high. Forget there. It's mentioned on a book, and I think also on a video course as well. Those bars are important, and I forget how exactly to identify. For example, here, no, for, the Bulls had a strong leg up from here, and uh, for that move, this was the signal bar basically that started this move. And in book, Albrook's is talking about the importance of that level, and when it comes to that level, it will be important. But Rose also use the last opposite side candle, so that was the strong leg up from here to here, and that was the last bear bar, and she will use it as the level for to consider a long from here.
That is what ICT call the order block. If you ever heard about that, that is the order block, because it was the last move of bears there. So when price reach again those levels, uh, price bounce there because those bulls are trapped and trying to get out from there.
Yeah.
Those bears are trapped there.
Yeah.
That is why they use that candle.
Yeah.
And also they use the 50% of that candle of or group of candle, because if you see this in a higher time frame, from candle 14 to candle 48, there you have like a cluster of, you have a lot of volume there. So when price comes back there, they try, and if they are short, they try to get out of those positions.
Yeah.
I like Rose's style because he complements very well, based on what you told me. Uh, some cool. I like volume, for example. So I think that is a good complement. If you trace a volume profile there, you probably you are going from 36 to, I don't know, 70. There, from there to 70, you will see a cluster, a volume.
Yeah. But yeah, you can see that by the eye that you have the cluster here,
Exactly. Yes.
cluster
Yes.
here, and then here,
Yes.
uh,
Yes.
and the most is here. Yeah. And that's like the gaps, and you can see
Mm-hmm.
the
Mm-hmm.
balls uh, on the volume as well.
Exactly. One above. Yeah, that one. From there to, you just have to drag horizontally. You don't have to go to the top. Yeah,
Mhm.
there. You see?
Yeah.
And from another guy, this I don't remember if it was Tom Dante or one of those guys, that the strategies to those levels to be tested, uh, they wait for price to come back to those level where they see. And it's also from market profile from Jim Dalton, uh,
Yeah,
because there were
yeah. You
a lot of.
basically
Mm,
you're basically waiting the price to go to. So if it failed there, then it will most likely fill the gap and came to the next like the
yes,
uh,
yes,
I don't know how to call it, like level of interest or like accumulation zone. If
yes.
Rose constantly using something like that, she talking about this a lot.
Yeah, basically it's a previous POC, and it's a value area.
Mm-hmm.
So you can configure that volume. It's super cool, the configuration you have there. You can put to trace the evolution of the POC, and those are we can do it if you are interested. It's super fast because it's a cool. Go and trace one profile.
I cannot see.
There, that one. Trace one there. Go to the right there. Now right click above there. Go to volume profile settings below and on bottom there. Now change in the first one where it says volume profile there. Change to that one. So okay, this is not the case because it seems that I can see volume profile. Go again to volume profile and the first one. Let me see the options. POC. I want to see not the POC but the POC value and high low volume profile POC. Yes, it's the one that you select, but you have to go to options, scroll down a little bit there. Don't go too fast. Back. Yes. Go a little bit low. Point of control. I think that is go lower. Fuck. Let me check it here because I have it. Volume. You need to use the one that says value area peak volume. It is.
So it's like showing the development of the POC.
Yes, that one. Did you find it?
No, I think I saw it on TradingView.
Yeah, no. But here I have it because I use it. In fact, I don't plot the. Drag the. Let me find it because I. Give me a second. I will find it here. This is. It's not this one. It's this one. Apply. Yes, it's this one. Oh, yeah. Okay, I have it here. So the one you have to choose is the last one. You already have it, and then you have to go to the option number 49, 40, the line 8 that is below line 48. You have to have activated that one. Let's see if it is this one.
It's not showing
Line
the line.
at the end of each sentence, you have between
Okay.
parentheses you
Yeah.
have the number of lines. So you have to go to the 48. That one. No, it's not this one. The one below value. You already have it in yes. So it's not that one. Let me check. Oh man, it's extended point of control. Highlight point of control. Here, 72. There you go. So those lines,
And the first setting is here. Yeah.
the last one, yes. So those lines, what they do is first you need to find the previous point. So what this shows you is the previous point of control, right? So at that level a little bit higher where you have the mouse now, the one you see and a strong, you need to look that one, that level. In that level below, a little bit below that level, you have to pay attention to the length of the line. If the point of control is where you have the mouse now, if that line is the length is strong, that is a point of interest. And if you see where the market open, of course you are not seeing the overnight action, but the price came back to that level. You know what I mean?
Yeah.
And the interesting thing is that you can drag that box the exactly and see how the evolution of that. You see, you have a super strong point of control there. If you zoom out and go from a low to a high, exactly. Because you had a strong move up there. So if you put your box from the low to the high, you will see how the volume was distributed from there to
Yeah.
the high.
It's already on a high.
No, but if you pass the high, you are taking into account those candles, and you don't want to do that. So you don't have to pass that. And another thing that you don't have to do is to take into account the yes. And because in the last hour, you have to take into account that it is they are closing position, right? So the volume at the end, you have to be careful about that, because it's going to introduce some noise, because it's not real volume of trading. It's because they are closing positions, right? So
Yeah.
I don't take into account the last candle. I only draw it till the 70 bar or something like that. But
Yeah.
from here you can see that the point of control of this volume distribution was at the almost at the low of the candle number 1 from today.
Yeah.
No,
So
this for me,
that's very.
this volume profile stuff are super powerful. I don't know why this guy, maybe because he can read candles super good, but he doesn't like it, but it's super useful.
Yeah, but I think this is something you can do by the eye. Yeah, when you have the experience, because the point of control most of the time will be at the biggest cluster of the biggest training range region.
Rose?
No, I
You mean
think
Rose?
the Albrook's, for example. You say why he not using that? I think that you can see it by the eye, or you can have the approximate idea of how it's
I
look
know
like.
what you say. Yes, yes. Based on what because this is volume profile and it's close to market profile, and market profile is close to the candle distribution. Yes, I know what you mean. Yes,
Yeah,
that is what you were saying.
yeah.
Yes, yes, yes. Maybe that is why he don't use it. Yes.
So those setting, if I delete it, it will. I will need to do it again, probably.
Yes, for the configuration, yes. There is a trick to save the configuration.
Yeah, I think it can be done here. Yeah. Okay. Yeah, so I do it that way.
Yes, you have to save it there.
Mhm.
And the last you save in the studies is the one that is going to take.
Yeah, so I need to or so to save it.
You can click here on set defaults once you modify it first, and then click on set defaults.
Okay. Yeah. It's that one. Yeah.
There you go. Yeah.
Okay. Let's go for maybe bar 40, then we can finish. Getting late.
If you want, because it's almost 10 there. If you want, we can leave it here and continue tomorrow.
Yeah, let's do that. Yeah, I will stop. I will mark it.